With AI fervor fueling a post-earnings rally for chipmaker Broadcom, the company predicting booming demand for its chips over the next few years. CEO also saying that Broadcom had won two major new hyperscaler customers, the biggest operators of data centers. Joining us now to discuss this, we want to bring in Stacy Rasgon. He is Bernstein's managing director and senior analyst. Stacy, it's great to have you. It looks like a blowout quarter here for Broadcom. AI revenue for the year more than tripling. What is your biggest takeaway from this print?
Yeah, so I think there were three things here, and you have to keep in mind, people were very nervous going into this print, especially around the guide. People were broadly expecting a miss. The quarter itself was fine. The guidance was actually in line. They didn't miss. It was mostly on software rather than semis, but I think that was okay, given where sentiment was. So that was number one, that the guidance was okay. And the AI semis, which is what everybody really cares about, they were pretty strong. They also painted a really good picture, secondly, like into the back half as they have new AI products ramp, and it actually does look like the AI trajectory through the year like gets a lot better, and I think better than even where people were modeling it. And then thirdly, over the longer term, they really gave people a reason to dream, right? So they were talking about, over the next, say, 3 or 4 years, they have three primary hyperscaler customers today that they sell AI chips to. And they pointed like sort of visions of a very large opportunity. They said sort of $60 to $90 billion potential opportunity over that time frame just with those three guys. And they, as you mentioned, they talked about two new potential customers. They haven't actually won them as customers yet. They're sampling, they're engaged. There's no volume yet, but they sort of painted this optimistic picture that the three customers that they're with driving that revenue, that's not the end all be all of it. There's potentially more as we go through it. And all of this, I mean, you start to think about what that AI trajectory looks like versus where numbers were, especially in the out year, and you can start to dream some really nice things in terms of where the earnings power of this company could go, coupled with what, like I said, what I think was very nervous sentiment going into the print. I'm not actually surprised that it's running up as strongly as it is this morning.
And so looking at the run up here, pre-market up 18%, a lot of investors going to probably be looking at a new all-time high for Broadcom shares at the start of today's trading session. Is it too much to dream for more from this point? Should you be chasing the stock at this level?
I don't think it's too much to dream. Again, you can start to work through some of the numbers of where the earnings power could be. And you think about even where Broadcom is trading versus like some of the other AI names. People sometimes complain about Broadcom's valuation because it is certainly more expensive versus its own history. That being said, it is a totally different company. You go back 5 or 6 years, like 40 or 45% of their business was wireless. Today, it's all AI and software, like much higher growth, much higher margins. And if you look at Broadcom versus other quote unquote AI names, it's actually one of the cheaper ways, if not the cheapest way to play AI. So no, like I'm not surprised that it's running, and I think the general perception is you probably have to be there, that this can work. And by the way, especially through this year, because like I said, they kind of set the numbers where they are in the first half. I think you got line of sight to like really good growth, especially onto AI into the second half as some of these newer products ramp. So I think there's going to be a view that things are safer to own now, and with that longer term story, I think people are going to want to be there.
Stacy, what are the implications here for Nvidia when you take a look at the stock's reaction here this morning, up just a little bit here in the pre-market? On one hand, I think you could argue this is good news here, just really speaking to the demand that we've heard from Nvidia. But on the flip side, maybe you could look at these results and what we're hearing, the narrative from Broadcom, and really that shows that some of these tech giants are doing everything they can to strengthen their in-house chips.
Yes and no. So they are doing everything they can to strengthen their in-house chips. And that's not new, by the way. Like Broadcom sells to Google, for example. They've been selling custom chips like this to Google for 10 years. Like it hasn't slowed anything down, right? I tend to lean more on the former of those two. Yeah, you can argue, hey, maybe it's a negative because there's more competition. My view is if it is really true that all of these hyperscalers are going to be spending that kind of money over that period of time, I think it's actually good for everybody that's selling into that space. Like one of the bigger worries that people have for Nvidia is just the numbers have gotten so big so quickly, you just worry about sustainability. It's fairly clear that at least Broadcom doesn't see any issues with sustainability of those spending trends in general. And if that is the case, I suspect that a rising tide will lift all of the boats here. I think it's actually bullish for everybody who's successfully selling into this space.